we're joined by Peter McGuire, who's the CEO at xm.com. Hi, Peter. Good morning to you, and thanks for coming by to our studio. First up, I want to get a reaction on the global markets. We've seen the dollar, which is hovering at about 6 months lows. Some geopolitical factors, because North Korea has tested one more missile. What are you making of the global scenario right now?
Well, good morning, and thank you for inviting me on the show. A couple of quick things. I think, last week was a demonstration of what President Trump's agenda is. He's taken himself to Saudi. He's taken on board to build and to probably take a little bit of the pressure off him as far as any talks as far as impeachment, and move himself to sell the US dream to the Middle East. There are bankers involved, the global strategists, and they're all coming together and saying, right, well, what's the pathway forward? There are monstrous arms deals, partnerships and so on. We saw a very solid sell-off as far as US dollar in the last matter of sessions, and the crude market, which we're leading into the OPEC meeting coming this Thursday in Vienna, is so fascinating, considering that US is pumping oil at record numbers and the Saudis are saying we probably will see a 9-month extension, and the other OPEC members are pretty much dovetailing and coming along for the ride. So it's going to be a fascinating week ahead.
But Peter, if I look in this morning, just wanted to ask you, I'm just looking at the numbers here. Again, the dollar index at 6-month low. But again, when I'm seeing the euro positions, the net longs actually, as per the CFTC, that is actually highest in the last 3 years. We actually saw on the Friday, the dollar index basically moving actually very close to 97. And then again, today this morning, dollar index actually trading positive. So what are you making of this move? Is it actually dollar is recovering, or you think euro is in actually a strong structural up move?
Well, the euro was pretty heavily sold off when we take on board what happened over the last matter of years. And at the present time, I think it was probably oversold. So it's had that nice bounce up. Very interesting also, we're seeing better than expected numbers coming out of Japan, 5 consecutive quarters of growth. So that's a good news story. And the overall structural reforms, and more importantly, the actual economy, I think, in Europe as a whole is getting stronger. So we're heading into that Northern Hemisphere summer. There's a feel-good, I think, mood across pretty much all of Europe, and also the tide's turning a little bit. I just saw some comments. Jamie Dimon was saying that, the IMF are traditionally quite pessimistic. They're even saying that things are a little bit more bullish now, or better. The sun's coming out a little bit. So I think overall, the European mood is one of strength over this Northern Hemisphere summer.
And also, let me tell our viewers also that today, actually, in the Asian trade, the commodities, they are trading anywhere between 2 to 5% up. Copper is up 2%. Zinc is actually up 5%. And if you look what actually happened on the LME side on Friday evening trade, again, the metals actually were trading in positive, anywhere between 1 to 2% up. So actually, the trade has increased more positive. It has become more positive this morning, while the dollar actually has not done much.
No.
It's actually just increased about 0.2%. So what do you think? And we actually are seeing the same move in oil also. Oil, we can relate to the OPEC sentiments.
Of course.
Metals, actually, they are reacting very sharply.
Well, I think probably you had that strong run-up in consideration over the last matter of sessions, and certainly Friday. So markets always take a little bit of a breather. It's only Monday morning. There's a lot of, I think, nervousness as far as traders. What's actually going to happen this week? Will they all band together? I'll be there. I'm flying out of India on tomorrow evening. I'll be flying into Vienna on Wednesday for the meeting, getting everything organised, and then Thursday it's the big day. So whilst I sit here and observe, there's a lot of undercurrents there collectively that will need to be pushed forward. If they're going to make these cuts, naturally they want to see that 5-year long-term average as far as supply. More importantly, what's going to be the end number? They've got their Saudi Aramco IPO in the not too distant future, and they naturally want to see a higher number as far as crude. So it's one thing for sure, I don't think the volatility is naturally going to go away. So I think it's going to be a wonderful time for traders to actually enjoy these markets.
Right. Peter, if there are more cuts which come about from the OPEC meeting, which is lined up in Vienna, what's the kind of levels which you're looking at crude going ahead, at least till 2017?
Well, I think over the Northern Hemisphere summer, if we don't have any weather outages, and it's very hard to say you won't have them as far as hurricanes and so on in the Gulf, which is that traditionally June, July, all the way through to November. If you don't see major weather outages, if you don't see any geopolitical concerns and North Korea doesn't fire any more missiles, if President Trump...
But there's no guarantee for that, because they've been testing every week, I guess, now.
And if you don't see any impeachments, and you see a very how would you say, a calm year ahead leading into Christmas, I think the crude market will stay between that probably 48 to say 54 trading range. But if you get a couple of those events that can greatly impact price quickly, can ratchet up, and all of a sudden you can be looking at, $55, $57 crude, quite simply because the unknown factors come into play.
Right.
And we saw that election over the weekend as far as Iran. We've taken on board, we've got Merkel's election, Germany I should say, but Chancellor Merkel in September. So these, again, it's just a wait and see approach because there are many ingredients that go into the actual pie itself.
Peter, markets will also be taking cues from US President's first visit to countries like Saudi Arabia and Israel. What are you making of his visit to these countries for the first time?
Well, I think first off, he is on the front foot. He's a typical entrepreneur, and that's his mantra. And he goes to, and he's a builder, so he prides himself really on building things and building relationships, building bridges, building pathways into and to get Saudis on board and see what they can do strategically together. It's a large market as far as arms sales and of course partnerships. So he wants to, I think, mend some fences, go in there and rebuild the relationship. He's a new president. He's only been in power a matter of months, and he's very much front and centre making things happen. So that's very similar, I think, in a lot of ways to maybe not personality-wise, but he's a doer like your Prime Minister Modi.
So Peter, we saw a good spike in volatility, both in terms of the moves which came in the equity markets, and then good sort of very high fluctuation in the currency market also. But for this week, do you think actually it could be a much more stable equity market? I was just looking at the European markets. They actually seem to be settling down. It was a good up move, good uptake. Even the breadth actually was good. Do you think that actually the last week, now this week, could be much better than the last week?
Well, I wouldn't be surprised. I think that there's still a little bit of conjecture out there as far as what the Fed's going to do with rates. I think overall, as we said, the European market seems to be gaining a nice headwind. It's got, pardon me, a tailwind. It's pushing it along. So I wouldn't be surprised, markets can sit still for a couple of days after those big moves. Let's see where the US dollar trades over the next 24 hours. I think that's going to be interesting, or 36 hours. And then that'll lead us naturally into that big news coming out of OPEC. So I think overall, it's quite a big news week. But I think that the markets could be, fairly range bound unless something dramatic happens.
And would you be positive on the Asian currencies? Because in the Indian rupee, actually, I think the RBI actually helped the Indian rupee. It actually was not able to rise beyond 64 rupees. But do you think the overall the Asian currencies, where actually the net longs were highest in multi-month, but do you think those should be much more stable?
I wouldn't be surprised, probably, have that, again, range bound and just have a little bit of a break because they've had such, big moves up. And of course, those emerging economies, I think fundamentally, you look at the likes of the Vietnams and across Asia, they've got big growth targets like India over the years ahead. And I don't really see that storyline changing too much with sheer population base and their technology focused and their workers. People work big hours in these regions and you get a lot done. If you're working an extra 14 or 15 hours a week compared to the West, it's just far more productivity. And that's something that Asia and India is just normal course of events. People work big days and achieve big results.
Right. Peter, I want to get your view on India specifically in the entire emerging market space. We've seen a lot of reforms coming about and positive takeaways because 1st July could be just the day when a unified tax regime could be implemented in India. How do you view India at the moment when Prime Minister Modi has completed almost 3 years now?
Yes, I think he's up over 1,100 days or getting close to it. I think, again, the growth targets, the IMF numbers, the fundamentals, you know, what happened with the currency end of last year. They're all very positive moves, and I think overall it's just going to continue that uptick over the next decade. I keep on saying it's really, I think, emerging markets and the Indian economy, it's your sweet spot, probably from 15 onwards and over. You've really got another 15, 20 years or more through sheer population base.
So what's the reason why there is no change in the sovereign rating?
I think that's a work in progress, and you know, let's discuss that in 18 months, and I think there probably will be. But it's not unusual. Sometimes markets can be a little bit slow to react. That's a normal course of events.
So you do expect the rating to change in the coming months, or say in 2018?
I'd say probably 18, 19. Let's just see. It's a bit hard to put it, you know, an actual, it's going to happen by that date. But I think fundamentally, it's a great news story. The Indian growth, and I don't say that because I'm sitting here in India. I'm saying it because I do believe it. I see the numbers, I see the population, I see the demographics. You've got everything right. You're technology focused. They're a hard-working nation, and you've only got one way you can really go. You've got huge consumption, and that will only increase. Have a look at the amount of cranes in Mumbai. Have a look at what's happening here as far as growth. Yeah, you're doing a lot of things right.
So Peter, like just a word around what actually you would be hearing from the institutions. We saw like good action happening on the Latin American side. The Brazilian markets all over the place. Currency was all over the place. Actually, the entire the Latin American markets, actually currencies, everything. Now, actually, what you're hearing right now, because again in the Indian market also, we actually saw that actually FIIs, or the foreign institution investors, they actually had reduced the long push on the index futures over the last few weeks. So overall, like in terms of a breadth around the indices, around the major ETFs, what are you hearing? Is it moving towards slightly conservative caution side, or is it more about circulating between the countries and between the asset classes?
Well, I think that those big numbers that came out and the worrying thoughts as far as the Brazils and so on, they do shake a market out a little bit and certainly create a little bit of tension. So I think it's just a wait and see approach. Things turn around. There are times that you can have other unexpected events happen globally, and it takes traders' focus away. Sometimes you just sit there and they look at currency. They say, well, what's happening as far as bonds? The talk, that uptick as far as what the Fed's doing. Are they going to... I mean, 3 months ago, they were saying we probably see 3 rate rises this year. I don't know whether you will now. You know, there's many saying, well, you might see another one, and that could just about do it. So whilst we say that some economies are going, well, you look at the US and it's not necessarily going that gangbusters, you know, so let's just see that low interest rate environment in a lot of those markets, I think, will probably remain for a while. Inflation's certainly a concern. Not suggesting, you know, as far as India, but if you're looking at it globally, that inflation number really needs to, you know, get an uptick, and consumption needs to pick up, and that seems to be a bit of a handbrake in a lot of those mature markets.
Peter, globally, it's been a risk on trade, and that's the reason we've seen the rally coming in the global markets, which has been fueled by a liquidity. Do you think now traders or investors still prefer emerging markets to developed markets, or the scenario could change in the coming days?
Well, traders have jumped in. I mean, since the Trump the Trump rally, that's certainly lifted all boats. The tide is across nearly every equity market in the world. So that will probably continue unless we see something dramatic happen and the wheels fall off. Again, that's an unknown. Some analysts are saying that, you know, you're fully priced now, expect a crash. Everyone's got their own opinions on, but one thing for sure, banks are not going to sit on their hands like they did, central bankers, that is, you know, a decade ago. If they need to prime the pump, they'll certainly do that with quantitative easing or further manoeuvres and pulling certain levers to make things effective, and they're not going to sit here and so that's where I think it's going to sweep and pick up emerging markets and really put more wind behind their sail over the short to medium term. And those numbers, I think, are just going to be, you know, wonderful here. In a decade's time, you're going to look and you're just going to say, you know, what India's produced in that year, in that decade, is going to be immense.
You know, Navneet, like I was just checking the CFTC data, the Friday one, and this should be interesting, Peter. Like the long contracts on the US indices, they actually have increased by, like they've dropped by 1%. But the short contracts, which at present they are like roughly around 40% of the total long contracts, they actually have jumped by 20% over the last 2 days. So again, similar to what we are seeing the Nifty in the Indian markets, similar sort of action, some sort of basically curtailing of the long positions happening on that side also.
Yeah, well, that's right. I mean, traders, they get a little bit nervous. They're not sure what's happening as far as, an impeachment, what's happening. I mean, there was talk last week, what impact it's going to have and where does President Trump play this whole situation. There's a lot of water that's got to go under the bridge in the next matter of months if he is impeached, and what effect that will have to a global market. So, again, great unknowns. And that leads us into, your earlier question as far as where do we see crude at the end of the year. You've got so many major events that could unfold over the next 60 to 120 days, which could certainly change a dramatic change to landscape.